All right, guys, break time. So we're back to work here tonight, Tuesday evening, 22nd day of February, 2022, 02-22-22. As always, my name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight, very important job tonight, my job is to help us fund the best trades, setting up for Wednesday's trading session. I got a great video in store for you guys and gals tonight. Charts are all ready in the background, as you can see. Got the Emini, got the Nasdaq, got the oil all ready for Wednesday's trading session. Great to see you are ready right along with us. Where do I begin? A lot going on in the world right now. Got a bunch of news coming out this week. Got a bunch of trades setting up for Wednesday's trading session. In tonight's video, I'm going to cover my favorite trades for Wednesday. We'll also cover some things to avoid to keep yourself out of trouble, whether you're trading on your own or you're joining us tomorrow morning in our trade room. Now, of course, before we jump into the video tonight, as always, make sure you subscribe to our YouTube channel. I publish this video every evening with my best trade ideas for the following day. I don't want you to miss tomorrow night's video, so make sure you subscribe, hit that bell icon so always get notified every time we publish something new. If you have any questions for me tonight, drop those questions in the comment section. I would love to answer any questions that you might have along the way. And if you guys enjoyed this video as much as I enjoy making it, do me a favor, hit that like button for me here tonight on this YouTube video. But don't forget to subscribe. I got more videos coming later on this week. I don't want you to miss tomorrow night's. So let's jump in. Wednesday is right around the corner. How are we going to make our money for Wednesday's trading session? Now, of course, a lot of markets right now are pretty range bound. We got the S&P is range bound. The Nasdaq is range bound, and the S&P for the most part is range bound as well. Whenever we have ranges, we're trying to buy low, sell high, focus on failures. But I'll tell you, as we get into the charts here tonight, I think you'll see for yourself the buy side tomorrow definitely appears to be a little bit of the easier money side. Now, obviously, a lot going on right now with the Ukraine and Russia drama and U.S. sanctions, so anything can change. But right now, though, we are definitely looking for some buy low, sell high opportunities. I would love to buy some of these moves off the lows on pretty much all of these markets, buying dips in the S&P, the Nasdaq, and the crude oil. And then really there's some great breakout opportunities here as we go higher for really all three of these markets. Crude oil is one that really stands out here as well. We'll avoid the middle, buy low, sell high, and again, we're going to cover all my favorite trades as we go into this video here tonight. Before we jump into each individual chart and talk about the best setups I'm watching for tomorrow, though, let's grab a look at the schedule for tomorrow because we do have a holiday shortened week here ahead of us. Monday was a holiday, of course. Hope you all enjoyed the President's Day break. We come back, of course, on Tuesday. Tomorrow is Wednesday, the 23rd. There really isn't any scheduled news for tomorrow, but obviously with all the hoopla going on with the drama between Ukraine and Russia, we know that's going to be something the markets will be looking for more information tomorrow. I doubt we're going to see any unscheduled news release, but I do think it'd be wise to keep your eyes on the news feed tomorrow. I will definitely have my news feed running the trade room tomorrow morning, just in case we see some more updates regarding this so-called invasion of the Ukraine. So that's going to be the big kind of factor for tomorrow. So a lot of kind of known unknowns when it comes to the situation happening in Ukraine. As we go later on in the week, we have, of course, big news on Thursday is that GDP report at 8:30 Eastern Time. And probably the biggest news of the week outside of the Ukraine stuff is the personal income number at 8:30 Eastern Time. That is another very valuable inflation report, and we know the markets will likely be waiting on that for Friday. So just a quick recap, no major news tomorrow, but keep your eyes open, especially in the early parts of the morning as we start getting updates out of Europe and what's happening in Ukraine and Russia, and of course how the rest of the world responds to it. That is something we're tracking here as we go into Wednesday's trading session. Looking at the charts here tonight, S&P, Nasdaq, crude oil is ready. Why don't we grab the S&P first? Got a bunch of ranges on these charts right now. And as you can hear, my voice is still a little bit hoarse, a little bit raspy here from last week. I missed you guys last week, by the way. I apologize for not being here last week, at the end of the week here. As you can tell, I lost my voice last week. I really haven't got it completely back yet. So I'll do a relatively short video tonight, rest my voice, and hopefully I'll be able to make a full recovery here at some point this week. I do appreciate all the emails and get well messages over the last couple days here. It definitely means a lot to me. So we'll work on that. It'll be a relatively quick video here tonight. Let's cover the basics though here on this S&P. The most important thing right now is we're pretty much dealing with a range-bound market on the E-mini. We had a range down here, had a range up here, and the market basically rotated between those two ranges for the most, for most of the day. This is a trading range, and whenever we have ranges, we find support levels below the range and look for buy setups below the range. We find resistance levels above the range, and we look for sell setups above the range. Now, in this particular example here, it's not going to be very easy to be a seller. For example, if we go lower, we have a lot of support down here. Get a major low from January 23rd at 42.12 and 3/4, right? This is a major support zone. And we've been watching this support zone for quite some time now. So buyers would love to buy it as we come lower here. Sellers really have to be careful as the market rolls lower because, again, I'm really simplifying it right now. There's a lot of levels down here that really could act as major springboards for this market going higher. So buyers would love to buy those dips below the low of that range down inside this massive support zone underneath us. And again, sellers really have to be careful as we go lower because of that major January 23 low. As we go higher here, we definitely can look for breakouts for the buyers. Buyers would love trading some breakouts here. We got a big range up top there acting as a magnet. That 4,500 level, 4,500 big round number could easily be a magnet later on this week. The sellers definitely do have potential right now, but imagine this though, if this thing really does start to push higher here, that is a lot of momentum for the bulls. You could definitely argue there's a range over here and the market now is rotating higher. So, like I said, when you look at the charts, it's a little more difficult to find short setups right now than long side. Now, it does not mean we can't sell short. It just means if we go higher, we can be really careful about that short coming off that high. And of course, as always, we definitely want to avoid the middle, sit on hands inside the middle of that trading range. So as we go lower, as we go higher, how do we trade this market? What I'm looking for tomorrow would be if we can make that run down, I'd like to use what we call a two-try failure to buy off of that low. What you have to remember right now is there's a very strong move down here previously that will likely try to retest that low. If we can take out that low, what you want to think about is this particular price action setup where we take out that low, a lot of momentum for the bears, right? And that'll be a very bearish momentum at that point. Think about this pattern setup. One try for the bears, two try for the bears. Then think about where those stops are, right? Look at what happened back here. We run lower, the bears try once off the moving average, they try twice off the moving average, and they run higher, right? Look back over here. We run lower, bears try once off moving average, twice, right, and back up. We want to look at that same type of setup here at those lows again. So we take out that low, the bears try once, the bears try twice. Think about where all of their stops are now above those highs and literally buy right into those stop losses. Now, once we get that failure to trigger, then remember that rotation now should take us to the other side of that trading range. I like to watch for a strong break higher, find a new channel, and then grab that first pullback off the low of that channel. So again, I'm looking for what I call a failure pattern, a two-try failure pattern off that low, and then we'll have to drill down and figure out which entry setup we'll get off the low of that channel. Now, I know a lot of you guys have taken my free trading course here at School of Trade, so you've learned about things like failures and traps and pullback combinations off of that low. So we're definitely looking for one of those three pattern setups off of that low. If you have not taken that free course yet and learned the price action entries, when to take them, when to skip them, what the rules are, I'll put a little link up here for you in the upper right-hand corner. If you're looking for an easy shortcut, an easy roadmap to follow each day, that link right there will take you to our free trading course. You'll learn how to find the right levels of support and resistance, how to time the entries with our 4 price action setups, but most importantly, you'll learn when not to take certain trades because they're not bulletproof, right? And we got to make sure we apply them with the right entry rules. So again, if you haven't grabbed it yet, grab that free course in the upper right-hand corner. You're going to love that free course. Lots of examples of how we apply our entry setups from our trade room. You're going to love that class in the upper right-hand corner. So as the market rolls lower, think about that 1, 2, and then back up, find that channel, right? And then grab that, right? Grab that, that move going higher there. Now, what if we really push lower, right? What if we really spike lower here? What you want to remember is that anytime we see a real strong move down, the odds are very likely they're going to get a retest of that low. The aggressive entry, or, the more aggressive entry is to go 1, 2, and then back up. The safest bet down here, if we see a strong shot going low overnight, the safest bet down here is to wait for a retest and then grab that 2-try failure into that first channel test, right? So it's really going to depend on the strength of that move down. But if we see a real strong shot going down, a really strong shot going down, right, at that point, the safest bet will be let them retest that low, let those bears try a couple times, think about where their stops are, and buy right into those stop losses. Then grab that first test off the low of that channel, and we'll rip it back higher here. As the market tries to go higher, how do we buy it? How do we sell it? Well, this is a very good example of where we really want to be careful selling off this high. Let me start back here. Market makes a strong run up. Let them retest and then look for that short back down again. So strong move higher. Again, it's going to be a pretty bull environment at that point. And then at that point now, again, the safest bet will be let them to retest, get that double top or that retest that high, and then execute that same 1, 2, and back down again. Now, I do like the short side on this. If we can get these buyers trying twice and selling into stop losses. I'm not a huge fan, though, of that follow-up trade off the high of that channel. I like the buy side of it because of the big support levels below us. I don't like that short as much coming off of that channel, right? So again, we go up. Do we retest and then 1, 2, back down, right? Then find, right, again, looking for 1, 2, and then we're selling into stops? Or do we go up, buyers once, buyers twice? And of course, there are lots of different ways we can take this trade. For one example, I love to look for traps on this 2-try failure. So if the market does break up and trap low, I can grab a trap high off this. And again, you'll learn about traps in that free trading course. We pop up, very strong bull move, 1 try, 2 try, back down into that trading range. And again, I'm not a huge fan of that follow-up entry off the high of that channel. I like it to the long side. I don't like it so much to the sell side. Or we break out. And what a breakout look like here? There's a couple different breakouts we can look for here. I'm going to cover a couple of them here on the S&P, and I'll cover a few more on the Nasdaq and the crude oil. The first breakout is the easy one, the 1, 2, 3 breakout. So we pop up. But now, instead of the buyers trying once, trying twice, and failing for a short, now the buyers hold that pullback and they jump going higher. When that happens, this becomes the measuring leg, right? That becomes the measuring leg. Keep that in mind. We draw that channel off the high. I drill down to my faster time frames, and I find those traps. I find those failures and those pullback combinations. Again, if you've grabbed the free trading course, you know the rules of those. If you haven't, the link again is up in the upper right-hand corner. Now remember, the size of the breakout leg will be the size of that measuring leg. So how far will that market go? It all depends on the size of that first leg, right? That leg will then be used as a target for that follow-up leg, right? Think about trending markets in threes, 1, 2, and 3. Right? We'll know more about that tomorrow, obviously, once we get there. That's one of the That's one of the entry setups I can use with a breakout. But let's keep going here, though. Over the Nasdaq. And I do want to keep this video relatively short. That way I don't kill my voice here for Wednesday's trading session. Over the Nasdaq here right now. And keep in mind, most of the items in the Nasdaq will also apply to the S&P as well, right? And vice versa. So you can definitely interchange a lot of these on both of these marks. They're very similar here right now. Looking at the Nasdaq here, the Nasdaq is also range bound. This time though, with the triangle definitely here, I think there's definitely more emphasis on this range right here. This range looks to be a little more obvious, right, than the range we saw on the S&P. The S&P kind of had two ranges back and forth. It looks like for the most part, the Nasdaq had a strong run up into a range. It popped up, rotated lower. They took out their pendulum swing, and now the market now is trying to rotate back up to ultimately take out these highs up here. So buyers definitely, again, like I said, we're range bound. We can buy low and sell high. But when you look at the chart a little bit closer, it's not as easy right now to find a good spot here to sell short. You know, for example, buyers right now, buyers would love to get down inside these lows here and buy it right back up. And that would make perfect sense because it's a very strong move down. They could easily retest that low and then 1, 2, and whoop, right back up into that trading range. At the same time, if we do go lower, the bears have to hold this, right? They're going to have to show us that they really want this. They didn't do it here, didn't do it there. So the bears really have to kind of put their money where their mouth is down there and show us a breakout. If the bears can get that breakout going lower, there is a huge open space until roughly 13,000. It's about 12,900 all the way down. So I'm not saying the bears don't have opportunities for tomorrow, but right now though, the more reliable trades are going to be on the buy side as we go lower until we get that breakout going lower here. On the buy side going higher here. As we go higher, you'll notice all this momentum now will be rotating going higher. So breakouts work up here. And again, I've really got to be careful on the short side. You can see even more importantly on this one, if we do make that move higher here, now that trend line's in our way, and it really makes it difficult to justify being a seller going back down in. So those are some of the problems we have right now for the bears. Again, the bears can work around this. The bears would love to get underneath that trend line and use it for a short. The problem though is that will take some time. We're going to wait for that proof as we go back underneath that trend line. So we're definitely going to keep that on our radar here. I'm going to get rid of this. I'm going to get rid of this channel. I'll put that trend line on and we'll talk more about that as we go. So once again, like always in a range bound market, we stay the heck out of the middle of the range. Want to buy low, sell high. But like I said, a little bit easier right now to justify being a buyer on this, at least for now, until something changes. Again, we could easily have something happen overnight. You know, the drama escalates in Ukraine and Russia. Markets all sell off overnight. That could easily be part of our day tomorrow. So we'll definitely talk about how to trade that. As we go lower, again, this is a pretty big breakout. It doesn't look very big, but it's a pretty big breakout. Today's range was really, really wide. So again, we'd like to get down into that low, get those bears to come in, let them try a couple times, like they did here, like they did there, right? And then literally buy into those stop losses. This is definitely where you can then go in and look for that channel before we get to the other side of that trading range. I love that follow-up trade. It's a 2-try failure into that. And again, the way I'm drawing it, it's a trap setup. It won't always be a trap. It could be a failure. It could be a pullback, right? Strength trade-off below that channel. Again, you know what I'm talking about if you've taken that free trading course I mentioned earlier. But those are the two key components as we go lower. Remember, if we really spike lower here, it will be best at that point now. Let the bears try to retest. Let them retest it. And then go 1, 2. Think about those stops. Now, one of my favorite entry techniques on these 2-try failures is to draw a trend line off that high, bring it down off that low, and use that little hidden channel for the entry trigger. It's the same thing, right? It's a 1, it's a 2. Like over here. We break down, we go up, right? We pull back. If I draw a trend line off that high, I can draw off that low, and that becomes a fantastic level for an early entry, right? We're buying off support, we're buying into stops. Again, you'll learn more about traps, hidden channels, and stop runs in that free trading course. But that's what I'm thinking here as we go lower. Now, if we go lower and the bears can hold this, if they can hold this and break down, then obviously that is a 1, 2, 3 breakout, right? Much we talk about in the S&P. If we do get that strong move down, if the bears can hold that breakout and really push through these lows, I'd be very, very concerned though if we see a move lower, hold that breakout, hold that move, and retest that low. In that situation, I would definitely be looking for that 1, 2 back up, or again, let them retest, and then 1, 2 back up we go from there. What we really have to do is we really get to see this market break down below that 15.8, that 13.580 area, because again, it's a major, major low here. And like I mentioned earlier, we've got this range right in the middle of this chart right now. Now, one more potential breakout pattern, let's talk about the going higher here right now, will be a spike and grind or a pop and grind. For example, as we go higher here, we've talked about the dangers of trading into this trend line right now. So the bears may not have any guts to sell into it. Keep an eye on this potential breakout pattern. Again, we talked about the 1, 2, 3 breakout and finding the low of that channel. So that will definitely be on our radar as we go higher here, right? If they can get that breakout confirming going higher, we've got that range overhead. And again, the size of the breakout leg will almost always be the size of that follow-up leg. So you can use that to fine-tune your targets as you go higher. But think about this breakout now. Think about how we might pop up. All the bears who are trying to sell short, they're realizing now they're stuck. There's a big range overhead acting as a magnet. What if we see this thing turn into a short squeeze? What's a short squeeze look like? One easy sign of a short squeeze is a pop and grind breakout, which basically means you pop it up, we don't pull back and jump off the moving average, we grind, we grind, we grind. At that point now, you have all the information you need. I'm going to draw a tight trend line off that high. Draw it really tight. Don't waste your time on these big channels. They're a waste of time on that situation. When it pops and grinds, draw that nice tight trend line, bring it right up off that major low, start looking left for those prior swings, drill down to your faster time frame. We'll find those traps, we'll find those failures, we'll find those pullback combinations. Again, where's my target up here? The size of the breakout leg is the size of that target leg. Okay, that'll help you refine that final target. And of course, tomorrow morning in the trade room, we're watching for those traps, those failures, and those pullbacks, right? We'll do this stuff together tomorrow in real time in our trade room. So make sure you come out and join us every morning at 8 o'clock Eastern time. That is another of those breakout patterns. I think, too, you could also possibly see a pop-up, a shallow pullback, a higher high in price, and a trap off that low. We call these 2-try breakouts. Strong move up, shallow pullback is the giveaway, higher high confirms the move, traps, baby. Now, these types of breakouts aren't guaranteed to keep going forever, but at the very least, they almost always retest that high. And then here we go. Here's what we could definitely look for, those shorts coming in. Once those buyers come in and retest those highs now the bears can come in, try once, try twice. But again, here's that trend line. We got to get underneath that trend line and try to use it as resistance on the other side. Be very careful as we go higher. If we do snap up, retest that high, 1, 2, something like that will work. Remember, it's a very bull market at that point, right? Very bull market. So again, the best way to do it, the safest bet is let them retest and then let those buyers try once, try twice. Maybe we get lucky and we get that short off the underbelly of that trend line, right? Draw those hidden channels off that low, up around that high, right? Very, very good way to sell off that high. And then we got to be careful over here because that trend line coming over, that'll be a great target. and then again targets on this side of that trading range. There will definitely be some options here that I'm leaving out here tonight, so make sure you come in and join us tomorrow morning in our trade room. We'll try to keep this video as kind of as short as possible here to let me get through this here and keep my voice from getting blown out here this week. So watch those breakouts as we're going higher. Buy low, sell high, and again, I think a lot more of the easier money right now is on the buy side setups. We'll see though. We'll see. A lot can happen here in the overnight. Last but not least, right now on the crude oil does look like the one market that definitely has the most bullish potential right now. Not only for fundamentals, for the escalation in Europe right now in a major oil producing area of the world. That's definitely something that likely will be on our radar for tomorrow. Even President Joe Biden here in the U.S. mentioned that we should get used to higher price of the gas tank here this afternoon. So I would imagine that is something playing on people's minds right now. But even without that, though, we really have a lot of reasons to like the long side here on the oil. It's, first of all, the strength of that move higher. Anytime we see a real strong move in one direction, we know the odds are pretty good that at some point soon we're going to make it back up to retest the high. So buyers would love to get up around that 95 area and set some 7-8 year highs on these oil futures. At the same time, you can see probably the most important clue today is this trading range. The market, of course, gaps up. It's basically a bull market into a trading range. They pop higher. Buyers try a couple times. We run lower. And, of course, we finish off what looks to be a pretty simple measured move going lower. This is obviously being held as support at this point at 91.18. And buyers, it looks like we're looking for those longs going back up into that trading range. Ranges act like magnets. At the same time, you could also argue there's a very strong move down about 10:30 this morning. Anytime we see a strong move in one direction, we expect another leg to retest that low. And so you could easily argue that the bears got everything they wanted today, and now the buyers can get their turn here tomorrow. Now, of course, it's easy to see. There's a triple measured move down here at 90.34. That puts us back at last Friday's close. The oil futures are the only ones right now that haven't gone back and retested those we call snapbacks, right? So this, of course, is last Friday's close here. We go up. It would make perfect sense to get one more leg down and then make that move back up. That makes perfect sense here. As a seller, this really becomes difficult because as we go higher here, this will be a hell of a move going higher. It'd be very difficult to sell into all that momentum going higher here. As we go lower, it's just a peppering of support areas. I have support down here at 89.5. I have support down here at 87.5. So it's going to take a little bit of strength here for these bears. I'm not saying that's not possible. It definitely is possible. But until we see some really strong moves lower here, we really got to be careful trying to short this market right now. So that's kind of what I'm looking at on my end as far as why I think the buy side might be the easier side tomorrow. But you know, again, I'm a trader. I'll take whatever the market throws at us. I don't care what direction I trade in tomorrow. I'm gonna come in early, get my charts all prepped up, and see what we get, right? And we'll do it together tomorrow morning in our trade room, obviously. So at this point now, I'll tell you, if it wasn't 6 o'clock Eastern time right now, this would be a decent long trade here, setting up as we speak. This is exactly what a two-try failure could look for. It's a bit of a gamble though, because we're in the, kind of going into the Asian Open right now. So that's definitely something that if you have some risk tolerance, that will definitely be something to look for into that new channel. And then again, grab that first pullback with your trap, with your failure, with your pullback combination off of that low. Again, I'm not a big fan of trading right when the market opens up in Asia, especially with all the drama going on in the Ukraine situation right now. So it might not be the most reliable setup for that two-try failure right now, but it's definitely a good example of things I'm looking for here, right, during the morning session tomorrow or during the London session here overnight, and then again grabbing that first pullback off of that low here. What I would love to see is get this market to make another leg lower, take out that triple measured move, take out that prior week close, get that low taken out, and then 1, 2, like we said before, run those stops, and then up into that trend line, and then grab that first pullback off of that channel low, right? 2-try failure. Again, would make perfect sense here. 2-try failure into that first test is the best test. As we go higher, take some money off at the high of that range, leave your runner for a possible nice move up to that 95 area tomorrow morning. Now, of course, as we go lower, again, there's no reason why the bears can't take control of this, but they have to show us proof. If we take out that low, if they hold that pullback, and we get a strong breakdown, great. 1, 2, 3 breakout. Find that new channel and grab that first test. Now, as you can see, we're right into those major areas of support down here. So this trade may not go forever, but again, you know kind of how to measure it, right? We know this leg right here, right? This leg lower will oftentimes be equal to that third leg going down. At the very least, though, it should be able to retest that low for at very least a quick trap or a quick scalp on the way down. Don't be afraid if the market was to go 1, 2, 3 going lower. Keep an eye out for that 1, 2, 3 breakout. Let them retest that low, and then 1, 2, and you got it right back up again with that same 2-try failure into first test pullback, right? That's easy to see that could happen, especially happening overnight, right? Strong move down, they get the breakout, they retest that low, because again, anytime we see a strong move, it's likely to retest, and then we see those 1, 2 from the bears. We buy into those stops, and of course, grab that first pullback as we go back up. That would be great too, because now you get all that open space up into that target for that range target up overhead here. That's how you want to trade this as it goes lower. And of course, as it goes higher here, one kind of easy trade right now, if you're watching the overnight session, be to wait for it now to make that move going higher. And then you know the objective is the other side of that trading range and up around those highs. So find that new channel, drill down to your faster time frame, look for those traps, those failures, those pullback combinations, and we'll use one of those entry setups we talk about in the free course off the low of that channel. So definitely keeping that on my radar, especially in the couple hours here into the overnight session. Now, as we go higher here, if we do end up all the way back up at these highs, which does look likely, but again, who knows? So we'll see what we get. If we do end up all the way back to these highs up here now, remember, in order to sell this type of move, it's such a big move, you're going to definitely want to let them retest, and then 1, 2, you got it, and then back down, we go from there. So keep that in mind as we go higher. I would also imagine too, if this market was to pop up and begin to grind higher here, those pop and grinds are really big clues. So mark up that high, mark up that low, stay patient for that nice deep pullback. If it makes a huge run overnight, everybody who comes in the U.S. morning session, they're not going to want to buy way up here, right? That'll be a great example, of course, if we see it spike here overnight, we get that grind going higher, find that channel, and you wait to buy those discounted prices, right? Don't chase those big overnight moves. You could argue that's exactly what happened right here, right? Market made a huge spike up overnight, right? Almost $5 up overnight. And then, of course, the buyers reject those higher prices. They wait now for the price to come all the way back. And now they're on a macro scale, on a bigger scale, buying that big old dip. It's the same idea over here. So if it does spike on the way higher here, it's to grind higher here overnight, don't chase it. Remember, the buyers that come in tomorrow morning, they're going to want to buy at a discount. So find those traps, wait for the deep pullback, trap in those bears, and use those stops as fuel, right? So remember, if it happens overnight, wait for that nice deep pullback. Don't grab that short off the high there, because again, anytime we see a strong move in one direction, we know the odds are very good we're going to retest that high. So keep your eyes on those traps, those failures, those pullback combinations off of that low. All right, guys, and unfortunately, I'm going to cut the video off here for now. I'm sure I've missed a couple key setups on the video here tonight, but I don't want to blow my voice here as we go into the rest of this week here. I do apologize for leaving you guys hanging last week. Believe me, it was not my intention to leave you guys hanging last week, but you can tell I'm trying to make the effort here this week to get this thing back on track here for us this week. Now, don't forget, tomorrow morning, every morning, 8 o'clock Eastern time, we'll be in our trade room. I'll put all the membership links, all the free course links, everything's in the description of this YouTube video or wherever you're watching the video right now. So grab that link, get registered for the free course, or join our trade room every morning at 8 o'clock Eastern Time as an advanced member. If you have any questions whatsoever, call that toll-free phone number or drop me a comment in the comment section below. And of course, we'll see you guys back here same time, same place tomorrow night on tomorrow night's video. Hopefully my voice holds up here this week. I'm going to rest things up here for now. Have a great rest of your evening. Have a good day tomorrow. If I don't see you guys in the morning trading room, and we'll see you guys same time, same place tomorrow. My name is Joseph. Be well, be nice to each other, and be here next time. Adios, amigos. Bye for now.